To remain updated with the latest business news, click on the bell icon.
Thank you for joining us on this very important session, because we want to really demystify crypto like you started off doing, and doing so eloquently. We will, of course, discuss a little more in detail the subject of how global finance is being impacted by this very new technology, and technology which actually people are still grappling in India and overseas trying to understand. Tell us a little more about this crypto craze, the global phenomenon which is now crypto, and how it really can impact. I mean, we've seen about private and public keys and all of that. And tell us a little more about how global finance is being impacted by the innovation which is going around, the decentralized finance which is taking place all over the world.
Thank you. I think, in your last words, you actually hit the nail on its head. The fact that it is decentralized. And I think that is a very important aspect we have to, keep in mind. Do remember that this entire, blockchain and crypto world started after the global financial crisis. There were a lot of folks who were actually displeased with the way in which the current financial sector worked, with a lot of centralization, and oftentimes also getting converted into rent seeking. We economists use this word rent seeking very, very frequently, which is basically to distinguish between if somebody makes money by adding value. Economists don't grudge that. But when an entity makes money by seeking rents, economists typically have a little bit of a problem with that. This entire world started from that. I think we have to be, in my opinion, we have to be very balanced in assessment. When I was the chief economic advisor, many of my students would actually send me emails, representations, conveying that crypto is a messiah. At the other end, you have actually, other people saying that, oh, you don't know where it's going. There's a lot of risk. So the other side will basically make it seem like it's like a can of worms that I don't want to touch. I think both those extremes are indeed extreme. What we have to actually recognize is that it may not be a messiah technology, but it can't actually solve all the problems of the world, but it is definitely a promising technology. And I think that's the way we have to view it. I also want to add a couple of things, and I think this related to what the former minister was saying, and I want to give a little bit more academic sort of grounding to it. There was this question and this debate about crypto as a currency. In economics, and I think all of us have actually learned about this, that a currency is typically, is either a note of account, that you basically keep an account of how much money you have. It's a store of value, and it's a medium of exchange. Now, think about crypto from each of these three aspects. And here, especially, let me cite this example of, about a decade back, this guy actually paying 10,000 bitcoins for buying 2 pizzas. Possibly the costliest pizza ever, bought, which is now, it's like 400 million a pizza, right? What that conveys is because of the intrinsic volatility. If, for instance, today I want to go and buy a pizza using crypto, I would rather say, oh, maybe a month later, actually, it'll be double, or maybe 20% higher. Why should I pay now, right? So that's the aspect with the medium of exchange. Similarly, when you come up, with currency being a note of account or also a store of value, in both cases, you actually need, absence of volatility. I think, and these are, while stable coins are actually coming in, and I'm sure some people here might have questions on that. Maybe Q&A we can actually get into this, but there are important questions relating to stable coins as well. So as a currency, I think there is something I'm not convinced yet. Second aspect that I must mention is, and as a financial economist, whenever I look at a financial innovation, the question that I ask myself, that's the bottom line. How is it going to benefit the real economy? Bottom line, the only question that matters to me as a financial economist, even though actually I teach finance students, but I will ask them saying, how is this going to benefit the real economy? Otherwise, actually, I'm not convinced. And, and I give this example to my students. Let's say you and I decide to play cards tomorrow. We start with, you have 10,000 bucks, I also have 10,000 bucks. At the end of the day, you may have all the 20,000, I may have none, right? But at the end of the day, we would have actually done nothing economically meaningful. Money has changed hands, but we have not added anything meaningful. But
still 10,000, 20,000.
Exactly. There's transfer. But together, between the two of us, we still have 20,000. And that's a very important point. Now, if on the other hand, that 10,000 were actually put in, let's say, for a project that is going to generate 15,000 more, absolutely, I'm all for it. And I think these are aspects that we have to keep in mind. We have to make a distinction between crypto as a currency, and that is where I think the CBDC is something that actually, worth thinking about. I'm not convinced that crypto as a currency for all of us is something that works well, because there are instances, in China, for instance, there have been many examples of Ponzi schemes being built. 5 million, a crypto operator vanished with $5 million. SEC had to stop, an ICO, an initial coin offering, which promised, and just imagine what is being promised. 13 times return, 1,300% in just 1 month. Okay, this is basically what was promised in an ICO. So these are aspects that you have to be very careful about. So to summarize, make a distinction between crypto as an asset versus crypto as a currency, number one. Second, actually, when we think about crypto as an innovation, it has to actually contribute to the real economy. For instance, Jan Dhan account as a benchmark, right? Enormous value to the real economy, because you're actually taking care of poor who basically couldn't have access to finance. So like that, you have to actually ask, that's the second question. And third, you have to actually still ask whether as a currency, it still satisfies the fundamental premises that is actually, that we look for in a currency. I am not convinced at this point it does.
I think you've made a very, very valid point around crypto as a currency and crypto as an asset. I think that debate, Dr. Subramanian, and correct me, you've been Chief Economic Advisor for a while, for a long time, and you've brilliantly articulated some of the economic, imperatives before this country. But I think that debate is settled, right? I mean, in India at least, because it's very clear that the Reserve Bank of India will be the one which will roll out the digital currency. But here, let's talk about crypto as an asset. As an asset as well, and like the former minister very, very, passionately put forward, there are still a lot of questions, and he represents a very important segment of government in terms of where the crypto asset discussion also lies.
Yeah.
What are your thoughts on that?
No, I think I'm glad you asked that question, and that's why partly I actually did this presentation. Now, what is the essence of it? If you think about, there are zillions of use cases today, and there'll be many more zillions coming in future of cryptos, right? But each one of them is basically just, you can govern it by thinking about it as a combination of public and private key. And if you actually have the wallet, crypto wallet is basically all the private keys that are actually inventoried, right? Therefore, in my opinion, even for crypto as an asset, I think there must be some regulation that must be there. For instance, a KYC. I have this idea that, we basically, with many of the practitioners, I've talked about it. Let's call it an India wallet, which is something where, if let's say I am a crypto operator, and you want to, trade on my platform or maybe do something, some activities with me, then I ask you to go and register with this, India wallet, which basically says you give your Aadhaar, you give your PAN card and your bank account as well. And given that we have the entire digital infrastructure in India is so ahead, we can actually do that digital, KYC, if you will, for the crypto world. Anybody who wants to operate in India, wants to onboard customers actually does this. And thereby, in my opinion, actually there is scope even for sectoral regulators to actually enforce their additional regulation. For instance, the Reserve Bank could say that, crypto above this much you can't invest in. Or, for instance, let's say the CBDT could say that I'm going to basically charge TDS on this, right? Whatever sectoral regulations. So you have the, India wallet, basically, which is KYC as a necessary condition. You also have sectoral regulations. And you also, and this is very important from the government's perspective and regulatory perspective, is develop the forensic ability. because I think that's where the innovation is. If we have to be able to keep pace of the enormous innovation that is going to come here, forensics is incredibly important. So with this India wallet infrastructure, I think even crypto as an asset can actually be regulated, can be regulated well in a way that the innovations that can come from it are enabled, and we're not basically not throwing the baby with the bathwater.
Where do you think then the concern really lies at this point? Is it about the tremendous volatility, or is it that they're still trying to figure out how exactly to treat this asset? What about regulation as well? I mean, you spoke about regulation, very important. How does one then regulate this entire gamut of crypto assets? Forget about the word currency then.
Yeah, as I said, and that's why I thought it is very, it's imperative that I explain that cryptos are finally nothing but public and private keys, right? If you suppose I don't understand that, then it seems like a complete maze of the number of possibilities there. And you will be a little cautious. But once I start understanding that it is nothing but a combination of public and private keys, and through a wallet I can indeed regulate this, then I think the first step in this actually is something that is already is traveled. I think that understanding is now coming around. It is important that we actually get it right, that the regulation has to be such that the innovations and the benefits for the real economy are enabled, and this kind of infrastructure, this kind of thinking, using an India wallet kind of KYC plus sectoral regulations can actually help. Another question, and this is something, to be honest with you, I'm still sort of debating very carefully, which is, because there are both pros and cons, and which side does the trade-off tilt in terms of one regulator versus sectoral regulators. It's a very important question, and I think, unfortunately, even research on this is still sort of emerging. So I think it may be useful to try out initially with basically sectoral regulations, see how it goes, and then maybe need for a regulator that is basically the be-all and end-all for this sphere. I think in this space, it is important to actually prototype and learn, and then actually go forward.
I think the point you made about sectoral regulators and like CBDT or RBI or even SEBI, I mean, which is actually regulated new kinds of assets earlier. I think that point, could be a good, interesting starting point. Do you think, I mean, given your sense and given your roots in the government, do you think that's actually beginning to take shape in the government? These kind of, this is an inside view we are looking for.
You're asking somebody who's 3 months dated now.
No, but I'm saying, I mean, you cannot really ban it, right? I mean, that's where I'm trying to get at. We can't ban crypto assets because that's a new asset class which is innovation friendly. Like Amitabh Kant speaking to us earlier, has spoken and said that very clearly that it needs soft touch pro-innovation regulation. Yeah. Do you buy that?
No, let me put it in this manner, because I'm not involved with the government right now, I think it wouldn't be correct for me to actually comment on this. But on a principle basis, I can tell you this, based on very close interactions with the Honorable Prime Minister. If there's one leader in this world who actually is so fond of technology and understands the benefit of technology, it is our Prime Minister. And I think, therefore, I actually am quite convinced that the regulation that will come will be one that will really look to avail the benefits of this technology, and that is why I think the stakeholder consultations and the wide thinking that is going on is to ensure that we basically really tap into the benefits of this technology.
We want to also take the benefit of your professorial skills, Dr. Subramanian. Tell us a little bit about what you expect the CBDC from the Reserve Bank to do. I mean, demystify it a little bit for us.
Yeah, I think this is, again, a good question. So I'm going to get into maybe 30 seconds of a little of technical stuff. See, when we think about money, there's narrow money and there's broad money. Economists use these terms, M1 versus M3. Narrow money is, think about it effectively just as currency, what we carry as basically notes. And when you think about broad money, that includes deposits as well. And deposits, if you think about it a little bit more deeply, and this is part of the book that I'm writing as well on money, that deposits actually come when loans are created. Okay, so Now, where does CBDC belong in this? At its core, every, whether it's deposit or even currency, right? It is an IOU. It is an IOU. When you read basically if you pick up the 500 rupee note, right? It is essentially a promise from the central bank that, the central bank basically effectively signed by the governor that I owe you 500 rupees. Deposit similarly is also an IOU. Now, CBDC is actually, is digital money. And, interestingly, James Tobin, who won the Nobel Prize, actually in 1962, just think about, 1962 wrote an article where he called deposits as fountain pen money. Deposits are fountain pen money because they actually get transferred with just the click of a button. But physical currency is not like that. Now, think about CBDC as fountain pen money, but basically issued by the Reserve Bank. So it's a liability of the Reserve Bank, much in the same way that the 500 rupee note or the 2000 rupee note is a liability of the Reserve Bank. But they have the fountain pen money kind of characteristic that deposits have. Deposits are basically liability of the bank. And so it's a combination of both of these characteristics. Now, this is, in terms of the what CBDC is. So central bank digital currency will be part of the narrow money, will not be part of broad money. And this is very important when people talk about, countries may lose monetary policy independence, etc. I think we have to be very careful, because when we are talking about monetary policy, we are always talking about broad money. And broad money is created actually by banks when they give out loans. Of course, currency is a part, but of late currency is maybe 15-16%, not very large at all. Even with CBDC, therefore, central bank digital currency, it's unlikely that CBDC will be a very large part of broad money. The other point, so fears about losing monetary policy independence are something that have to be seen in this light. Now, point number one. Point number two is, because this is digital currency, it gives the Reserve Bank, or any central bank in the world, opportunity to actually create smart contracts and maybe implement counter-cyclical monetary policy much better. For instance, during a time, let's say like a crisis, if you want to actually give out currency, let's say, just hypothetically, and you say that, this has to be spent within 3 months. You can do that with CBDC, which you cannot do with physical currency, because physical currency can be taken and stored. So there are aspects that actually, positive aspects that I want to highlight, because there's been a lot of fear that's been created about how CBDC may actually just take out the entire, potency of monetary policy. I think those fears may be overblown when you start thinking conceptually and deeply about these aspects.
In fact, what you're saying is far from that. It actually probably would aid it. Would you see that as probably a deficit financing by way of CBDC, if that were to arise?
No, I think we are mixing up two things here. Deficit financing is actually, that's a completely...
No, I'm talking about printing money.
I understand. I understand that, but printing money, eventually that is about the intersection between fiscal and monetary policy, and that's maybe for a different session. But focusing just on the monetary policy aspect, the CBDC gives sort of some arms in the tools of the central bank, which hitherto may not have been there, and that's the point I want to, I'm trying to highlight. The second, and that's the more important aspect, is that eventually money in the economy, which is broad money, that is a large part of it is created by banks, and that is something which CBDC may not have a very large impact on. Third point, actually, there's a recent research paper by Bank of England economists who actually have shown that if you create CBDC to the extent of 30% of the overall of the GDP of the country, that can actually increase the GDP growth by, I think, 3%. I may be, it's been a couple of months since I read that paper, but they're talking about some of the efficiency gains that can come from this. Again, let me be very, very clear. I am choosing to focus on some of the positive aspects of CBDC so that some of the fears on this aspect can be allayed. I think that CBDC should be something that should be done because, as I opined earlier as well, currencies, cryptocurrency actually for the common person, I think is a no-go, and therefore CBDC is something that we have to do. But the important, I think the success or the failure of the CBDC will critically depend on how secure and how robust is it created. I think that is because the temptation will definitely be there to go and play around with it, and I think that is something which is really critical.
I think in an earlier session probably last month, the finance minister also made this point that, it's not as if the RBI is suddenly waking up to this. There's been a lot of thinking on CBDC before the budget announcement itself. So one assumes that these things. So are you hopeful that the CBDC will be rolled out, as soon as possible? Or is there going to be a time lag of sorts? I mean, this is just no inside view required.
No, you're asking me to jump 2 hoops here. First, even when I was in the North Block, I couldn't say anything about the RBI.
That's true.
So I presume they're actually working on it.
So we've unfortunately run out of time completely on the session, but we can take a couple of questions from the audience. We can't let him go without answering some of them. Yes, please. Could you identify yourself and ask the question?
Good afternoon. My name is Dr. Prateek Ghosh. If we equate CBDC to a digital currency, what steps are being taken as a crypto as an asset for a sovereign security point of view? Means if my crypto hyperledger crashes for some reason, like a lot of hacks were there in US and all. So if a ledger is hacked, there is no safety. So if crypto is an asset, how do we make sure it's safe?
No, I'm a little confused by a question because we are making this distinction between crypto as an asset versus crypto as a currency. And I think CBDC is about crypto as a currency, keeping in mind that cryptocurrency, basically, given the 3 criteria that I spoke about, in private cryptocurrencies are a no-go in my opinion, and therefore CBDC is basically what should be done. But I think let's not mix the crypto as an asset and the crypto as a currency part.
Okay.
Yes, please. The gentleman in the black jacket, yeah. Yes, please.
I just want to ask about the regulations. Do you think the regulations are actually toothless because we have a huge P2P marketplace that you could essentially trade the crypto in? So any regulation that come out, do you actually feel that it doesn't have enough of an impact in the market?
No, the way I outlined it, actually, as I said, if you have do the necessary KYC, right, through a wallet, India wallet, and with necessary thresholds that can be enforced by the government to ensure that small investors who do not understand this actually don't burn their hands. I think B2B transactions can definitely be enabled by saying that, beyond a certain the threshold, you can actually pay using crypto. You use it as an asset, but use that for payment. I think, once you actually have this infrastructure laid out, especially of a India wallet, and the necessary...
Yeah, but what I'm actually trying to say is that can't be governed because of its P2P nature. Like, you can't put any limits on what I am willing to transfer to a third person. No, it can't be traced also. Like, so
no, see... That is precisely why I'm actually saying that this, if you have the necessary KYC with Aadhaar, with PAN, with the bank account, then, while it doesn't make it 100% foolproof, it does make it much easier to actually track and thereby, enable legitimate businesses. And on top of it, if you allow for some sectoral regulation as well, whether it is by the tax authorities, government, or the sectoral regulators, whether it's SEBI or RBI, etc., you can then enable a lot of this B2B transactions as well. That's the point I'm trying to make, that this thinking can be one that can really enable the innovation underlying crypto and blockchain to be, for the Indian economy to be benefited from, without actually some of the fears really transpiring and ensuring that the fears are mitigated.
Yeah, Business Today managing editor Anand Adhikari has a question.
Sir, suppose tomorrow if RBI pays interest on CBDC, Don't you think that the bank money will shift to CBDC, the broad money which you talked about?
The way I understand, actually, as I just said, the central bank digital currency is digital currency. It's like a digital 500. You don't get, interest on the 500 rupee or the 2,000 rupee note that you own. So I don't think that the way, at least I would, understand there is no, interest being paid on that, because then it starts becoming like deposits then, right? There has to be a difference, and that's why I made the distinction between broad money and narrow money. In my opinion, deposits actually are part of the broad money. CBDC, whenever it comes in, I would think, and this is something which, as I think research is still happening on, but that will be part of narrow money, and therefore it should be similar to currency.
Another question, if I see the bank money, there's a huge risk because tomorrow if the bank fails, RBI is not going to compensate me. So CBDC, there's just security is there. So I can...
But look, I think this is the key point, and this is something that the minister was talking about as well. Not just now, but over the ages, the concept of currency has always been umbilically linked to the concept of the state as well. Not just now, basically, it is the sovereign that actually has had the monopoly over issuing currency. And that is where trust comes in, that is where reliability comes in, and all the other features as well. Now, much like in the case of the 500 rupee note that you have, that is basically backed by the promise, it's fiat currency, where the Reserve Bank basically is saying that, I promise you $100 or $500. Same thing with this, with the digital currency as well. And let's not confuse here again. Look, when we talk about runs, we talk about runs on banks, and that is about loans and deposits, which is basically part of broad money. CBDC, when it comes in, will be part of narrow money, which is basically currency that is, that's a liability of the Reserve Bank of India. And the Reserve Bank of India actually is, in any country, the central bank has the highest credit rating and should be able to take care of all its obligations. So I don't think that should be a concern at all.
Okay, thank you.
Thank you so much, Dr. Subramanian. It's like academia's gain and government's loss to have you back there. And look forward to having you back here with us very soon as the CBDC is rolled out and as crypto assets hopefully get some clarity around that on the regulation. Thank you very much.
My pleasure.
For
Thank you very
to us.
much.
Thank you.
If you like the video, do like, comment, share and subscribe.